Well, Mindtree reported a rather strong quarter, beating expectations. CNBC TV 18's Rukmini Rao caught up with the management of the company to understand their growth plans. Let's listen in.
We are extremely confident of our growth for the next few years, actually. I think the underlying foundation that we built, which is great talent reflected by low attrition, high retention, high attraction for new talent to come and join us, which is one leg for us. And the second is great customer satisfaction, lifetime high scores on our annual customer experience survey. That led to very strong deal wins, and many of them are very large, multi-year, multi-million-dollar deal wins, growing pipeline, improving win ratios. All of that points to, all the foundations are in place. Barring any systemic or a macroeconomic kind of an event, I think the future is very bright for us.
Sure, but the digital wins for this quarter has been tad bit lower. Is that a one-off thing, or what is the kind of outlook as far as digital deals go?
Digital this time was 102 million, so it's actually a fairly strong quarter for us there. Beginning to see much more larger digital opportunities, so quite a few 5 million, quite a few 10 million, 1 or 2 20+ million kind of opportunities in the pipeline. So overall digital continues to be very strong for us. And when we are looking at pitching for digital deals, customers are clearly validating that our specialization story is resonating very well with them. So scale is lesser of a priority for customers when it comes to choosing a partner for digital, but expertise and specialization is more valuable for them, and that places us in a very, very good spot.
Sure. Jagan, just to understand from you, you've also guided very good margins for the next year. Where is this confidence coming from? And also in terms of pricing, just want to understand from you, is pricing something that is going to be a pain point going forward as well in the coming year?
As mentioned by Rosto, the revenue momentum, we are expecting it to be very strong in financial year 19 compared to FY 18. So this is going to on itself will help the margin to improve for us. And we have other levers like pyramid and campus hires, which is going to help us to improve the margin. Apart from it, on your second question, price realization, the price realization is stable at present at the contract level. We are not seeing any impact from any particular customers coming in this thing, and maybe 1 or 2 quarters between the quarters there can be a movement in the pricing, but overall pricing environment is very stable at present.
Sure. If you can also give us an outlook on the hiring for the next year and also the kind of hikes that you'd be rolling out and any impact of that in the coming quarter.
Yeah, we are planning to hire about 1,900 campus minds now. At the latter level, it will be based on the replacement and requirement basis, fulfilling will happen.
Sure. Rosto, just want to understand from you, getting into FY19, what are the macros indicating right now? You've, of course, gone ahead and said that the pipeline is very strong. But at a macro level, are all the geographies looking okay for now?
I think both the US and Europe, which is our largest markets, are very strong. Asia Pacific also continues to do well, so I think all the primary footprint that we have continues to be very strong. But given the fact that the US and Europe are our largest markets, I'm just focusing more on that for the rest of my answer. Both did quite well, 7% growth in one, 6% growth in the other geography in this quarter. Momentum continues to be strong, customer sentiment continues to be strong. The only macro risks are either anything happening from a geopolitical point of view, or what's worrying many people is that if there's any implication from a terrorism point of view. Those are the macro risks that are worrying our clients at the moment. But barring that kind of an extreme scenario, I think customer sentiment, business sentiment is very, very positive, and that bodes well for us. People are beginning to make much larger bets in discretionary kind of investments, and we are well positioned for those kind of opportunities.
So the discretionary spends are seen going up next year?
As we see as of today, definitely yes. So customers are saying that they expect their business to be stable or improve, and therefore they want to make investments in capex IT, which is typically the discretionary kind of work. So we are seeing a change in the sentiment from our customers right now.
Sure. So one final question: you are having a very comfortable cash position as of now, and given that digital brings almost half of your revenues, is there any kind of acquisition strategy that you're looking at on the digital front going forward for the next year?
We continue to be very disciplined in our capital allocation. If you look at this year, we had our first buyback in the history of Mindtree, continuing to increase our dividend payout ratio. So the capital allocation strategy will be primarily driven by what's good for our shareholders, and we'll continue to look at ways by which we can support our shareholder expectations using the cash. Acquisitions will always be a part of the strategy, but at this point of time, nothing is on the cards.
Strong numbers, strong guidance, and the stock is at record levels, having doubled in the last 1 year, but also trading at premium valuations now. We'll slip into a very short break. When we return, we'll come back and discuss the stocks that should be on your radar today and are buzzing in trade.